Hello everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infinox on Friday the 23rd of December. Now, the final trading day before Christmas, we're going to take a look at 3 charts which reflect the market outlook as markets move into the Christmas period. We're looking at euro dollar, we're looking at gold and the DAX Index. Now, kicking off straight away with the euro dollar, what we saw yesterday, well, basically what we've seen in the last week is a consolidation on euro dollar. Since that FOMC and ECB double header, we've seen the market settle down into this tight range. No real dollar strengthening, no real euro strengthening either way, but there was a reaction yesterday. I put it on the hourly chart. We saw the market falling sharply yesterday as the US GDP, the final revision of US Q3 GDP came in, strengthened the dollar, but since then euro has sort of regathered some of its that move, and it's now rebounding again to consolidate once more in this range. So tight consolidation. The positive bullish outlook on euro dollar is still there. It's still holding these run of higher lows. It's holding the breakout levels. It's holding the move higher. You can see here, this dotted line here is the old primary downtrend, that dates back all the way to mid 2021. It's holding that breakout. It seems as though the market is positioning for a test of this crucial resistance, the May-June reaction highs of 107.85, which was the old key support. This line, this green line here, that's the resistance. But you look at this momentum still strongly configured, suggesting that corrections are a chance to buy here on euro dollar. Now, I'm still going to remain positive, I think, on euro dollar until or if the market moves below this reaction low here, which is 104.40 area. If market moves below that on a decisive basis, I think that starts to look a little bit less positive, maybe even turning corrective again. So that's the consideration I've got there. But at the moment, obviously, we're just consolidating, biding time into Christmas. Markets don't tend to do a great deal forex wise over Christmas, so markets may be fairly steady, but it looks like euro dollar is playing out that situation there. So holding ground. But as I said, the support at 104.40, the resistance for a breakout 107.35, then you look at 107.85. But it's looking positive, still configured nicely on the momentum and looking decent there for the euro dollar. Looking at gold, well, you can see here this recovery uptrend is a decent uptrend actually with positive momentum, and it's just pulled back from this resistance band here. The resistance band you've got, that was 1808, 1809, and it's just pulled back from 1824. If I zoom in one more level, you can see here this run of higher lows, 1, 2, 3, 4 higher lows, all on this uptrend, and now all coming on this 21-day moving average. We're still holding up above 50 on the RSI. The question that I'm still thinking about is this a bearish divergence? These lower highs on the RSI coinciding with higher highs in the price. So that does leave me a little bit cautious running this uptrend. I'm bullish on gold generally moving into 2023. I think it could be a good year for gold. But running into the new year is a bearish divergence and maybe leaves a little bit cautious. That there is a reversal pattern here, a double bottom base pattern came back to the neckline. That implies 1844. So there is a target still to be found from gold moving higher. But just for now, it pulled back yesterday. Again, I'll go on the hourly chart again. Look at that. That was the candle there. The hourly decisive move lower on the hourly chart in the wake of that US GDP data. It's found support again around that uptrend level, and it's starting to move higher again. So it's gathering once more, and it looks like that is a buy into weakness on a near-term basis. But can it move and break out above 1824 is the question. That would open 1844 and then 1865, 1870 as the next area of resistance overhead. And finally, onto the DAX. Equity markets could be the place to get a bit of volatility over the Christmas period. You do get thin markets in equities, certainly. We've had some choppy moves in recent days. We had this spike higher on Wednesday and a move back lower again yesterday. I go in the hourly chart. You can see that move accelerated lower. I think this was the candle here. Yes, it was. candle accelerated lower on the downside on equities on the back of that US GDP data yesterday, but markets have regathered a little bit. But interestingly, this move, I'll go on the daily chart, you can see here this neckline resistance of the top pattern, 14125 to 14195, this purple area here, that is the neckline resistance of the top pattern. That has been the resistance now, the pullback into that resistance, and it's fallen away. Look at that RSI failing at 50. That's not ideal, certainly from a bullish perspective. That resistance there is preventing a Santa Claus rally in my eyes. If that can get through the resistance, then you could see a Santa Claus rally back to the highs. Santa Claus rally being a bullish move through markets during the low liquidity moments, low liquidity sessions over Christmas. But for now, that is a key resistance, and obviously it's in place. But yeah, so that is the situation that's holding back a rally. But equally, you've got the support coming in around these old breakout levels again. And if I get the crosshair there, you're looking at between sort of 13,600 to 13,700 basically as the support. So with that in mind, I wish you good luck in your trading. Merry Christmas from everyone at Infonox, and good luck for 2023.